All right, we got about a minute and a half till go time. Hypers, Never Ender, Cliffo, Diamond Handsies. Appreciate you guys already checking in the chat. And just about 90 seconds, we are going to get it underway. We're going to have the weekly recap, and then we're going to have a little bit of an aside about the pipe unlocks that we've been talking about. We made a quick blog post about, and then we'll get into what we think looks good for the upcoming week in the market. Cash Money checking in too. What's going on? Here we go. We got Jules checking in the YouTube chat too. 30 seconds till we get going. And there we go. That is the timer, and we are going to get things started. So once again, thank you guys for joining us on another Sunday night edition of our stock market analysis, where I sit here and just kind of have a stream of consciousness for about hour and a half, and hopefully you guys can help guide me along as we figure out what we do or don't want to talk about for the upcoming week. But as with every single week on here, we're going to get it started with a weekly recap. I mentioned it a couple seconds ago, but we're also going to have a little chat about the pipe share unlockups for former SPACs. So that should be, I think, an interesting discussion and something that's a little bit of a change from what we typically do here, trying to switch it up from the, what might be getting stale with the normal format and have some sort of unique aspect to every single stream each week. So that's what we're going to use this week to talk about. And then most importantly, after all that, we are going to take a look at what we think is best for the upcoming week in the stock market. So let's get into it. And kicking things off, this is 1:15, so our week isn't quite as good as it looked, and I think that's going to take us. Yeah, we underperformed in the market this week. So we did not accomplish our goal. However, we made money, so it's not the worst thing in the world. I'm never going to be too mad at making money in the stock market. So top to bottom, some of our longer plays like UWMC, we sold this for, I think, $1.10. So where it sits at $1.15 is really only a slight loss, but definitely is kind of annoying to have that much capital locked up for that amount of time and not have too much to show for it. But the flip side of that is it's a much safer trade, so I'm perfectly happy to just keep letting this one play out as it may till December. Rocket Lab is one we've been holding on to for a few weeks, and we finally had some action on it this week. And I think this one, while this went up to 115, I think this one got down to about 40 cents. We could take a quick peek here to see what we're holding on to. Rocket Lab, it's trading for the January 45 cents, excuse me. So it is lower than what we saw right there. So if we update the price on that one, we'll have 45 cents. Does that bring us back? Look at that. We are now outperforming again. So maybe my mistake for not updating the tracker off the bat, but good to see that we are outperforming as we head into the next week. But let's talk about Rocket Lab. What happened right there? We made $2,000 on that one this week from the price of that January 7 strike put, losing a third of its value. And for something that's so far from expiry, right? We're still 3-4 months away from that January 2022 expiry. How did this thing lose a third of its value? So let's take a look at the Rocket Lab chart here. We go. We're loading a lot quicker this week. I've got high hopes for the internet connection. Taking a look at the last 20 days, it's been relatively flat. I think the most important study that we could put on here is that Implied Volatility study, where we're going to see that it dropped off a little bit over the last month, right? And from this $1.40 range to about 1.2, which is what we like to see with these implied volatility trades. If we back it out here, we're going to see that initial spike in implied volatility that we entered in on. and it started to taper off a bit. Still a little bit elevated above what it used to be earlier in the year, but that's pretty normal for something that was a former SPAC. So we're just going to remain patient. Hopefully these will drop off a little bit further. Our goal is to get out of these for about 20 cents ish, and let me explain why. So with Rocket Lab, former SPAC spiked up. Another former SPAC that had very similar price action is actually going to be SoFi, which if we back a little further up, right, we're going to see that it traded around that 10 range. It spiked up, fell back down. Same deal with the implied volatility, though. Off the initial spike, it got up really high, fell back down. And if we take a look at January 2022 7.5 strike puts, you're going to see that these are trading for between 6 and 8 cents a piece. Whereas, this stock's trading for 16.21, whereas Rocket Lab, similar, 103 days till expiry on those. Oops, I didn't mean to type the W in there. But, trading at 14.71, so about $1.50 lower, but there's still a good amount of juice in these 7.5 strike puts. And that's something I believe will start to evaporate over the next month or so as it hopefully levels out around this price range and the implied volatility drops back down. But back to the main thing that we were talking about, which is, why did it drop so much just this week? And the answer is, with former SPACs, there are these pipe share unlocks. And if you've been following along in our premium chat, we had a really in-depth talk about those this week. They've caused disaster for a lot of former SPACs because they seemingly come out of nowhere, right? If we take a look at SPIR as an example, this is one that we were playing, and quite frankly, we didn't know it was coming. And this enormous set of red candles right here, I think it was in the last month, so we could zoom the chart in a little bit. There you go. This big drop from 12 to 7-ish, basically overnight between September 30th and October 1st, was caused by a pipe share unlock up. If you look at something like LIDR, same deal, right? There's this big drop off, and it began to taper off and fall off the face of the earth. I think there was another one that I'm forgetting the name of right now. VLTA is another one that had the pipe unlock, and there you go, these big overnight red candles, and it levels off around that 7 area. So the issue with these is, you know that they're coming, and we're going to talk a little bit more about the mechanics behind this pipe unlock up. But what's important for our Rocket Lab position is that the share lockup, the unlock of the pipe shares, happened between October 7th and October 8th. So basically, it was effective last Friday. When the news dropped, there was this initial drop off to 13.24 at the lowest after hours. So everyone's like, oh no, here we go. It's going to be happening again. But, through the research we had done on the stock, we were confident that Rocket Lab wasn't going to drop as far as something like SPIR or LIDR. And the reason why we're going to talk about after we finish up our recap, but it has to do with the amount of shares that are being unlocked in relation to the overall float. But, all that to say, that unlock of the pipe shares is a very volatile event. So the options going into that week were pricing in some serious potential volatility for that event. So when that event occurred and it didn't drop off the face of the earth, that event's behind us. All the premium that was in these puts that we sold for that event started to fall off. And we could actually, if we go to the chart itself for this option, we line this up on, I think, 5 days here. It's tough to see the lines here because it's these little gray dashes, but you can see pretty quickly, right? It was trading around 60 to 70 cents. And then when you get to Thursday, Friday, when the unlock happened and nothing really happened, you see the value of the put that we sold drop from about 60, 65 cents down to 40 cents overall. And that is just from the evaporation of that implied volatility, that extrinsic value that we've been playing so far. And we're comfortable based on the price action after the initial pipe share unlock up that's some price action on the put side that we're going to see, and it's going to continue to lose value. I think our exit target, as we mentioned a minute ago, is that we're going to be trying to leave this position for about a 20-cent debit at some point in the next month, right? So that means if we had made $2,000 on it this week, a 20-cent debit would be $2,500 more of profit in the coming weeks on that position. And again, if all else fails and it does start to drop, remembering that this is a stock that's trading at 14.71, and regardless of what happens on a week-to-week or month-to-month basis with the price of the option, as long as it finishes above 750, which is down here, we're still going to hit max profit. So this thing could lose half of its value tomorrow. And as long as it held this line right here at 750, ultimately that position is going to be okay. But we always do like to exit when we realize big chunks of profit on longer term plays like that. But based off the price action, we could even pull up the SoFi put as an example of what we might expect to see going forward here, right? If we look at the January 7.5 strike puts, which again trading for between 6 and 8 cents a piece, all of that premium pretty much has evaporated. But if we go back to I think 180 days here, they had theirs in May, so I think we might need the 1-year chart. And I think this is about as far back as they go, but the idea is the same, right? If we look at this chart starts in June 2nd, so let's find June 2nd right here and blow that up. And what's crazy, right, is the fact that, if you're buying a put, you would expect the value of the put to go up as the stock goes down. Well, even though the stock went down here over the stretch, the price of the put was still going down, and that's due to this huge drop-off that we see right here in this blue line, that implied volatility. So that's a way that we could set up something that's a neutral to bullish play. So if SoFi kept running, we would make money. But additionally, we protect ourselves on the downside because we could put ourselves in situations where even if it continues to drop like this, the puts that we sell will slowly decrease in value thanks to our best friend right here, the blue line, implied volatility. And if we take a look at Rocket Lab, there you go, right? We entered at what we perceived to be roughly the peak of that implied volatility. It started to come back down, and we assume that over the next month or two, it's going to continue to come back down. And while this is still the SoFi put, we expect similar price action on the Rocket Lab put. And that's why we think that we're going to be able to get out for a 20-cent debit at some point in the next month or so. But moving on, SPIR, we initially lost on that 7.5 strike put, not this week, but we had that loss last week. That was one of our disaster trades, right, where we lost almost $4,000 on that one. But that, unfortunately, an initial loss up front, but, we try to move our targets down, right? We rolled 7.5 down to 6 strike, and now as long as it finishes above 6 next week, we're going to be looking pretty good. And let's take a look at that chart really quickly. It did scare us a little bit at the SPIR at the back end of last week, dipping down a bit, but it had a very, very nice rally into close, getting back up to the 650 level. So again, over the next 5 days, as long as this thing holds above $6 a share, we are going to see roughly $2,000 more of profit on these. So we're really looking forward to that one. I love the way that that one sets up individually. And speaking of individual weekly trades, those Rocket Lab January 2022 puts, this is still SPIR. If we type in Rocket Lab, you'll notice that the red position flag, we don't just have a position for the January 2022 strike puts, we've got one for next week too. We sold some 12.5 strike puts for 50 cents a piece, and those are looking phenomenal as well. I think those still have a little bit of residual implied volatility just from last Friday's event. And again, if we level off in this area Monday, just stay relatively flat, I think these are going to lose value very, very, very quickly. And again, just looking from a chart perspective, that 1250 max profit point is right here. So this thing's been, volatile as ever over the past month. But again, our profit point is so far below that we have to zoom out on the y-axis to even see it. And, we'd have to go to the 180-day chart to see back when, on September 3rd when it was trading below this level. But again, we sold 12.5 strike puts for 50 cents. So above all else, we have a break-even price of 12. And if we get assigned on those, that's okay because we could have a 12 strike basis, look forward to November where we could sell, pretty much at the money calls for $1.50, get our basis down to $10.50, which is right around here, headed into November. And, all will be well again. So that's a perfectly manageable trade if it does move against you this week. But if it doesn't move against you and remains above that 12.5 strike, a really nice 3.31% ROR at this rate. It was a little bit better last Friday when it was going for 50 cents, but still 3.31% in a week is absolutely nothing to turn your nose up to. So we love the way that that one sets up for the upcoming week. Rockley is one that's kind of been a little bit of a pain in the ass, admittedly. We could take a peek at the chart here. We have this profit point, max profit of $7.50, and our break-even price is roughly, let's zoom in here. It's not going to be down here. Let's remove the drawing. Our break-even price is at about $7.05, so right about here. Unfortunately, we're kind of towing that break-even price, but again, similar to the discussion we just had with Rocket Lab, if we, it goes further down than 7.05 this week, we'll have a basis of 7.05 in the shares. And then if we look forward to November, what's really encouraging is the amount of call premium that we have right here, right? So if we pull up our handy dandy system calculator to do some really basic math on what that would look like, we initially sold some 7.5 strike puts for 45 cents of premium, meaning we have a 705 basis if we're assigned the shares on the 7.5 strike put that we sold right here. And if we do get assigned, not a huge deal, but we rest easy knowing that we could take that 705 basis, which we'll have next Friday, turn around and sell covered calls at the same strike, roughly 750, and get 80 cents of premium, meaning that's a direct reduction in our cost basis to give ourselves a 625 basis and potential upside to 750. So that would, if we did, run through that trade and had a 625 basis and Rockley came back up, we would have the potential to get those shares called away for 750, and that would mean a $1.25 gain on those divided by the 625 basis that we had. Oops, not 625, 6.25 basis that we had, which would set us up with the 20% gain on that trade in just about a month and a half, even though we got in up here and it went all the way down here. Just as long as it rebounds back above these red lines right here, we are set to make a very, very nice gain on the trade. And I think if it finishes anywhere above 705, we'll just take our profit and we'll move on to the next one. Palantir worked out well for us. That one expired worthless. Crsp was really unfortunate. It's one of these where I think I used the, what should I say? We've got Sleepy Condor. We have some criticism here from Sleepy Condor saying the call premium won't stay the same if it drops. That's absolutely true. However, even if it just stays flat, we could expect the call premium to roughly be in this area. If it really falls off the face of the earth and goes down to like 6 next week, we might look to go in the money at the 5 strike to really get that basis driven down. But either way, the amount of volatility we've seen on Rockley, I think we should be able to get a decent amount of premium on here to at least get our basis below 650 for the upcoming month. And if that's something we want to do come Friday, we will evaluate it at that point. We could take a little bit of an aside right here. We have a couple questions, and I'll pull the chat on here so you guys can see what I'm saying. A question from Stockboy7254 in the YouTube chat. Can we look at PayPal? Visa, please want to be a common share. Would I be a buyer on these? So let's take a look at PayPal. PYPO. There we go. And, the way that we like to look at these things is we start with about the 180-day, where it's relatively in the middle of the range on the 180-day chart. You've got a peak up here at about 310 a share. You've got a base at around 220. These look like decently well-established areas of support and resistance. And what I mean by that is, the peak right here pretty much matches up with the peak that you see right here. And the support that we see on those lows at about 225, we have 1, 2, 3 bounces off of that, and then another bounce off that 235 area, about $10 a share higher. So not the worst entry potentially in the world, but then what we like to do after this is back the chart up a little bit more to get a little bit more of the story. There's the 1 year, there's the 3 year, and obviously a lot of these tech type stocks are going to look the same. I know this could be considered more of a finance company type stock, but I kind of lump them all in the same group for something like PayPal. But with these, you're going to see a lot of the same story over the last 3 years because that group of tech stocks really has gone on a pretty significant run. And that's what you're seeing is it ran up from, 100 up to about, 300 here at the peak. This right here is the COVID crash going from 118 down to 86. But from the bottom on COVID, this thing really, really, really took off. And, it's one of those things where are valuations like this justified, right? Is it justified that a company that has been as large and as well established as PayPal for as long as they have been, does that justify a 3x in valuation? Will that 3x hold if we start to pull back? And I think you'll find if you look historically that during pullbacks, some of the stocks that get hit the hardest are the ones that run up the most before that inevitable pullback. Excuse me. But, that's not to say we're going to see a pullback and this thing's going to be going down. But as far as long-term investing in something like this, the entry is not the worst in the world, right? Because it peaked back in July. So relative to that July entry, this is definitely a little bit better. But, from what we do, we sell options. Let's take a look at how the options chain looks. Maybe for something like PayPal, since it's a steadier stock, you would want to go out maybe a month, 2 months and see what you could get right there. And, not enormous premium on a week-to-week basis. You can get about 1% or, 1.5% at the money. And for how much this thing moves, it looks like there actually might be some decent opportunity here. We talk so much about the market maker move, and this is what TD Ameritrade and Thinkorswim call a proprietary formula that the market makers move when they sell options to try to predict how far a stock is going to move. Whereas the implied volatility that we have right here is the implied volatility that's reflected from the option chain that we see right here. And based off that implied volatility, it implies that PayPal is going to move 850 in either direction. Whereas the market maker implied move up here says that it's only going to move 380. And that's a huge edge to option sellers, right? Whenever you see a number here that's decently smaller than what is shown right here. Because when realized volatility is less than implied volatility, meaning the actual move, which we could presume to be this, is less than the implied move, which is this right here, you're going to make money because the options are too expensive. And when options are too expensive, that is how we make our money around here. But with that in mind, thinking that the options are pricing in an 850 move, the market maker move right here is about 380. That would put it at about 275.50. Not a horrible place to sell a put if you were interested in going in on a little bit larger, steadier of a stock. 257.50 for 250 premium would get you down to a 255 break-even price, which if we go back to that, if we go back to that 20-day chart here, 255 break-even price. It's definitely a price that's potentially in play. We have to remember that. And it traded below that back on October 4th. But if we zoom a little bit further out, we'll see that if we extend it to the left, and extending it to the left, taking a broader look, I think is super, super important because you could see if the price point that you have lines up with any areas of potential support or resistance. And we aren't really seeing a ton here, right? It looks like an area of resistance back in March, but not really as strong of an area of support or resistance as I would like to see. I think a little bit better level right here would be the 248, 249 area where you see some resistance here, some resistance in this area. Looks like the stock chopped in that area back in that March period that we were looking at and acted as an area of resistance again back in May. So I think potentially this 250-ish area would be a better place for entry, but one of those where, if you're in love with the stock, you could sell as close to the money as you would like to with the goal of potentially getting a sign, but at the same time, also a great one to put on your watch list. If it goes below 250, set up an alert so it lets you know, and then you could hop in with something that would give you a break-even price in that mid 240s range, and I think that would be a really solid place to start. And the next one we're going to take a look at is VLCN. They IPO'd last week. We got that question from NASCAR all out in the YouTube chat. So thank you again for tuning in and being active in the chat. We're going to take a look at VLCN. No options, which we're never a fan of because we always like that little bit of security that comes with options. But looks like this thing IPO'd, and obviously one that is going to make it to the top of some of those social media or hype lists, because this thing bottomed out at $7.12 a share and then went up to 15.5. I mean, that is some serious movement for the day of IPO, getting basically a 100% increase between, and we could even look at times right here, right? This is 11:30 in the morning, and this is 12:30. In 1 hour, this thing basically doubled. That is crazy. Shout out to Alex for the follow. appreciate the comment in the Twitch chat. But it fell back down, and with things that are this volatile, we never like to just purely own shares of something. And for those of you that follow us, you'll definitely know that that's the approach we take. Every single investment we make is done with option selling in mind. So this is something where with this kind of volatility, that breeds option premium. So if there are options on this at some point in the future, that's something I would keep an eye out for, because they would likely have some insane premiums with the kind of range that's been demonstrated on this one so far. But for now, I think it's just a little bit too risky to own shares at this level based off how volatile it's been. But once those options come around, they should have some serious premiums. And typically for IPOs, options are released about 1 to 2 weeks after the IPO. So that would be when you have the opportunity to get in on those. So, potentially another one like PayPal, just throw it on the watch list, keep an eye, check and see if there's going to be an option chain introduced in the morning before the market opens, and wouldn't be the worst thing in the world to potentially try to pounce on. But with that said, let's get back through our list. Crsp was one that we messed up on, admittedly, And you can see right here, we sold, it was 25% of our account fully cash secured, really only 3% of our buying power because there were some really nice margin requirements. But admittedly, when we enter into trades, we like to do something a little more in line with what we do right here, right? Because the idea is, for some very easily demonstrated figures right here, we're going to pull the calculator onto the screen. But we like to enter into about, a 6% of our account off the bat. And that's what we see, right? 6, 7-ish, 6. And the idea behind that is with our HT wheel strategy, we want to leave capital on the sidelines so that we could potentially double or triple down on trades. So if these moved against us and we wanted to double our stake, multiply that by 2, that trade would be taking up 12% of our account. And at that point, doubling down on a trade using the option selling strategies that we have, we would have a very effectively lowered cost basis at that point. But let's say it kept going down against us and we wanted to keep lowering our cost basis. And again, the best way to do that through our option selling strategies, double down again. And at that point, we would have been able to double down twice, and we'll be set up with the trade that has probably a super, super low cost basis compared to the price of the stock at which we entered. And it's only going to be taking up about a fourth of our account, but that's about as much as I like to have taken up by one trade fully cash secured. One small exception to that is going to be with what you see on Rocket Lab, where we have 40% of our account, but that's because it's a little bit longer of an expiry, that 6, 12, 24 that we were talking about. Really more so applies to those weekly trades that we have in there. So that's the methodology. And when a lot of people ask us about our position sizing, that's the approach that we like to take to that. But moving further down, Crsp, we did break our own little rule right there. Unfortunately, 25% of our account off the bat. We're always happy to talk about our successes, but I think it's also equally important to talk about areas that we could have done better. This is absolutely one. And the hardest part of this one too is the little bit of hindsight, because this thing dropped pretty heavily on Friday, and on Thursday we had an opportunity to potentially close this thing out for 80 cents, and we didn't take it, unfortunately, and that would have given us a monster week. And looks like we've got some more comments in the chat. The robot approach and the fact that we're willing to put highly on our watch list means we're about that robot life. Thank you, John Michael. And even though I formally call you John Michael, I guess if we want to keep it casual, thank you, JM. But, always love the feedback on our trades. The robotic approach that we have is one of these things where, above all else, we are playing the numbers game here. And it's tough because trading inherently, when you've got all this money moving around, is just so big of an emotional commitment too, right? There's no denying the fact that psychologically you are attached to your money, and that's normal. That's a good thing. If you don't care about your money, you're either stupid rich and you don't need to listen to us, or you're probably going to make a very, very big mistake that is going to ruin you financially. So being worried about your money, caring about your money, is really going to help you protect your money. And, that's really rule number one. We want to do everything we can to protect our capital. Starting with smaller trades like this is a way to accomplish that. Using diversity across tickers is a way to accomplish that. And then using diversity of our strategies, right? If we want to sell cash secured puts, if we want to sell spreads, if we want to sell longer term, that's another area of diversity. And these are all things that we use to help protect ourselves, preserve capital, and ensure that in the long run we have the numbers working for us, and that we'll come out on top. As we quickly click over here to show, we're not just talking out of our ass. These things work, they compound, we make smart, consistent trades, we stick to the system, stick to the strategy. Is it going to work 100% of the time on every single trade? Absolutely not. But in the long run, these things are going to net out against each other, and we are going to see some consistent and, most importantly, sustainable success. So that's my little aside that I feel like I end up making that tangent on every single stream because it's just such an important point to make, especially with the amount of volatility, the amount of pumping that goes on social media, people sharing these crazy gains but not showing their all-time returns and getting people sucked into that kind of thing. We're trying to move people a little bit off the tracks there, get you onto a safer, more consistent, and most importantly, repeatable strategy that you can use not just for success now, but to actually build good financial habits, good investing habits, and make yourself some money in the long term. We've got Mohan in the YouTube chat saying, "What's up? How's it going?" Sierra's popping in the Twitch chat. Really appreciate all the comments on my voice tonight. Thank you guys. But I will keep moving down the list here. SOL, that was one I think we put our free trade of the week in our Discord server. But it was nice to actually have a free trade of the week go well, because I feel like the ones that we gave away free, at least last week, didn't work. But before that, it was a decent run. SPX, we had another put spread, and the idea behind that one is, the market is going to get oversold at times. There are going to be big drops. There are going to be red days in the market. Anytime we get to a point where the market is super, super oversold, that's when we like to enter into these bullish put credit spreads. And the idea here is we pick a point when we think the market is basically at the lowest. How do we figure that? We look for areas of support. We look at RSI, which is the relative strength index. And we could pull up what we did for SPX here, right? So we opened this one kind of at the beginning of the week, right around here is when we did it. And I can click off that. For reason SPX takes forever to load. I'll use SPY because for whatever reason, the bigger numbers make Thinkorswim slower. But with that in mind, this is right around where we entered. And the idea is, if we zoom a little bit further out to like the 20-day, our entry right here is at a point where 1, 2, 3, 4 days in a row, there were these pretty big drops in the market. There was an area of support down here at 424. So we said, hey, let's open a trade on Tuesday morning, where as long as it stays above this red line right here, we're going to hit max profit. And that's a pretty good value proposition because, even in bear markets, even in pullbacks, there are going to be green days and there's going to be rebounds. That's just the way that the market works. And that's when we try to swoop in on something like this. And that really helped us a ton. We picked up about $950 of profit, which helped save our ass against stupid positions like what we had with Crsp. And then moving further down the list, CEI is a super fun one to talk about, because this is an example of one. There are going to be these trades you see on social media like we talk about, or I guess like I talked about a couple minutes ago. But these things are so crazy to watch because you've got people who shall not be named on Twitter, saying, oh, I'm going to get in on this at 50 cents. We're going to pump it to $1. And when it gets to $1, they're saying, hey, it's going to make it up to $2. And when it gets to $2, people are saying, oh, it's going to go to $5. And then it gets up to $4.50, and they're saying, uh-oh, it's going to go to $10 a share. But eventually, they're pumping these stocks in their own self-interest. And eventually, you're going to see something like what we saw back on October 5th, when there was a huge circuit breaker down to this 140 level. And the idea with these is, they're fun to keep an eye on because the day-to-day action on these is insane. Some stocks like this move crazier than any stock you will ever have seen in your life if you're just sitting there and watching it. I think what it had on Thursday was a 100% day. And then on Friday, it ended up a little bit red. But there were just a ton of volatility on a hour-to-hour basis in this one. So it's kind of fun to trade, but we can set ourselves up in a trade on, just looking at this chart right here. This is a dangerous chart. What we could do is take advantage of these huge spikes in implied volatility, which is what you see right here on the circuit breaker down, and sell some puts. So we were able to sell some one-strike puts for about 25 cents a piece. And I think we sold a batch at 20. We sold a smaller batch at 30. So our average was actually 22 cents a piece. But again, the idea is we sell a one-strike put for 22 cents of premium on average, which gives us a 78-cent cost basis, which if you draw it on the chart here is right about here. And the fact that we're getting 22 cents of premium, 0.22, on a 78 potential max loss, because that's our basis, we're pulling a 28% return in 2 weeks' time. That is a huge number. And while I would definitely recommend against having any enormous traded sizes on something like this, the fact that you could get a 28.2% return in 2 weeks definitely means you could open a smaller trade as far as percentage of your account is concerned and still get comparable gains on a dollar basis. So that's what we did. It's fun to follow along with these, but the basic strategy behind this is you watch these when they build up, you watch them when they build up, and what goes up with these. I mean, this company is not the greatest company in the world. In fact, it may potentially even be the worst company in the world, CEI, and it's absolutely not something that I would want to invest in long term or anything like that, because that's something that I've seen on social media as well. People saying, hey, this is a great company, great fundamentals, this thing's going to 10, it's going to be the next AMC. All of that is complete garbage, quite frankly. But we're going to follow the line of thought that we had with our approach, and this is how it played out for us. We saw it getting pumped. It came to the forefront of social media. It was on our Twitter timeline day after day after day after it kept going and going, and people keep seeing these jumps, right? You see it go from 150 up to 180. You're like, oh, I should have bought. And the next day you watch it go from 180 to above $2. You're like, oh, I should have bought. And then all of a sudden you see it go to 250 and 3, and then you start getting this FOMO, and that's when you start jumping and you see this huge call buying volume. Tops out at 485 on the afternoon of September 29th, and then you see the inevitable drop from 485 to 289, which is an absurd drop in 2 hours time for a stock. And then you have a day or 2 or 3 where it gently comes back down, and then, as is the case with garbage stocks like this, whose stock price increase is just based off pure market manipulation, there's going to be a huge down day with multiple circuit breakers, and that is what you wait for. That's your cue to get in. You don't say, hey, this thing's running up, I'm going to sell a one-strike put. You wait for the day that it starts to come back down, and that is when you swoop in at the bottom, quote-unquote, pick up the trash and keep it moving. So we were able to sell off this circuit breaker drop, and I think we sold them at about 175 a piece up here. So we didn't even hit the bottom of it down here when it got to 105, or you could have gotten up around 30, 35 cents a piece. But that is when you get in. That's when you set yourself up with the 78-cent basis, and you sit back and you just let that trade go to work. And for us, that one right here made us $750 in, I think, the 2 days that we had it open. 2 or 3 days. I forgot how many it was open, right? 1, 2, 3, 4 days. I gotta losing track of my days here, but in the 4 days we had that one open. A relatively easy, dare I say, $750. It wasn't, I almost said low stress, but I don't think that was the case, because this thing was moving all over the place. And if you back up to the 180-day chart, this thing had been at 33 cents before. So the downside potential was definitely there, but what we love are the way that the numbers stack up. And what you see right here on this big pump, this dump, and this rebound, this is very, very, very common on stocks like this. So we could even go to our friend AMC, where you'll see something like this on the initial jumps, right? So if you go to the 1-year chart, here's the initial jump on AMC. You've got it trading at this 2 level. It spikes up to 20, which is an insane jump, and then it falls back, and notice where it levels back out. It levels back out at about $5-6 a share, whereas previously it was at about $2 a share. So that's super, super common that you'll see on a pump where something is just manipulated up by trading activity. You'll see it settle down above where it previously was. So that was kind of the thesis, the idea behind what we were playing right there. We knew that the pump was from about the 40-50 cent level. We figured at the very least it would settle above 78 cents for the short time frame that we had, right? We only had 2 weeks to expiry when we opened those up. In worst case scenario, thinking through the process of running that HT wheel, if we were assigned at a 78-cent basis, what we could do come October 15th, we would take assignment at 78 cents a piece, and you'd be able to sell some calls for some very, very, very significant call premiums, right? Because you could knock your 78-cent basis down damn near. I mean, they wouldn't be this high if it were trading at 70 cents a piece, but I don't think getting 30, 40 cents a call premium for the ones would have been out of the question. So you could have gotten a 78-cent basis minus 40 cents a premium, which would get you like a 30 or 40 cent basis, which is right around, when we go back to that 180 chart, those are right around the lows it was trading at in the back end of the summer. So that is the whole thought process behind that. One, the short-term October 15th expiry that we think it's going to finish above here, because typical pump action, you see the pump, huge drop-off, get in after the drop-off and wait for the rebound and leveling out. Or 2, if it doesn't rebound and level out, we have a contingency plan where we take assignment of those shares at a 78-cent basis, sell calls for November, and then we've got our break-even price right around here. So I was okay with either A or B as far as those outcomes were concerned. But I think it's a great way to play some of these riskier, higher-flying stocks that are getting squeezed. And with the advent of this social media type hype investing, there are going to be so many of these opportunities. So I'm a fan of getting in, again, not on the pump, but on the back end of the dump, taking advantage of the spike and implied volatility on the dump, and then just letting that premium come home to roost and taking home that profit. So that was the idea right there. Moving on, FFIE 7-strike put. That was one that we got in and we quickly got out. And the answer, why did we get out, is because there was a potential upcoming pipe lockup. And, I'm not going to talk too much about the rest of these. These are just, Clover Health, Wish, Hyliion, typical week-to-week trades that ended up making us $200 overall when they got netted out. So with that in mind, why did we stay away from FFIE? This is going to be the perfect segue into our discussion about former SPACs, about pipe lockups, how they work, and how we could potentially predict their effects on stock price. So before we do that and get into a discussion about how we could potentially predict something about, like if you look at SPIR, how we could predict red candles like this, let's get into that. But I'm going to take a sip of water really quickly because I think I've been going for about let's see, about 45 minutes right now. Throat's getting a little dry. Excuse me, I hope you all enjoyed that 15 to 20 seconds of dead air. Glad you were staying with us. But getting into the discussion about pipe unlocks. Here we go. So with SPIR, we talked about this at the top a little bit. We entered into this trade with 7.5 strike puts, which were right about here, when the stock was trading right about here at 16. So you might say, that seemed like a really good idea at the time. And if we cut the chart like this to see how we were looking at it at the time, I would go as far as to say that it was a really solid idea from a numbers perspective, right? Because we were in a situation where the stock could have dropped from 16, it could have dropped by 50% all the way down to 8, and we still would hit max profit. Now, knowing what we know and seeing what we could see with the little price bubble that we have right here at 653, that obviously was not the case, unfortunately. So what went wrong for us? And the answer is that there was a pipe share unlock for SPIR, which unfortunately involved a lot of selling on the behalf of those pipe investors. So what is it? How can we tell when it's coming? And how can we tell the potential impact of a lockup to see if it's going to be something like this where it drops off the face of the earth, or see if it's going to be something more along the lines of Rocket Lab where it trades relatively flat and then the options lose a ton of value. Like I think if we do percent change from last Friday, these got absolutely crushed. So if we sold these, you were making money. So let's get into it. And I think SPIR as an example is a great place to start. So for those of you who don't know, pipe unlocks, registration, even earnings, things like that, annual, quarterly reports are all publicly available online. All you have to do is search SEC Edgar, click on that very first link, and you are going to get yourself to the Edgar Company Filing Company Lookup. So if we type in SPIR, we are going to see a list of Spire Global's recent filings. So if we go to view filings right here, we're going to be able to see all of them. And this right here is what got us, the 424B3. And this is a filing that unlocks the pipe shares. So if we take a look at this, we can click on it. We can see the actual filing itself. What is important on this right here, and I'm going to blow this up a little bit. I feel like the monitor that I stream on is pretty big, but some of you probably can't see this too well. All right, we might be too big there. Hopefully this is a good little middle ground. But what we're seeing right here is the filing, the registration, the unlocking of the pipe shares. So the question is, of the amount of shares that are in play for a company like Spire, how many are about to be unlocked? So quickly right here, you can see in the very first sentence that this prospectus relates to the resale of 24.5 million shares of Class A stock issued in the pipe investment. So that tells us that there are 24.5 million pipe shares. Let me put this over here so we could do some math as we go through this. 24.5 million pipe shares that were going to be unlocked and eligible to be sold, again, after the date 9/30 right here. And if we go to the chart on SPIR, you'll see when was this big drop off. It was 9/30. The date comes up right here. We put our mouse right here. This was 9/30, the date that was filed. So reading through here, if we go back to the form, we'll see that there are 24.5 million shares of that unlocked. How many shares total were there? And you'll see right here, right at the top in the header, there were 61.88 million total shares. So if we take 24.5 million and divide that by the 61,883,713, you're going to see, oops, that's what I want. You're going to see that 39.5% of the total shares were being unlocked for sale. That means previously 40% of those could not be sold, but now 40% of those can be sold. And that is a huge, huge, huge percentage. This is the money number that we're going for when we take a look at these filings and try to get to the bottom of what's going on with these upcoming SPAC pipe unlocks. So 39.5, 39.6, if we're rounding up here, we'll get that 9 in there. But 39.6% of those shares were going to be unlocked. And this is the result of that. And after that day, if you take a look at something like the October 7.5 strike puts, let's take a look at these. Plot these side by side. We'll throw the 10-day up right here. We'll throw the 10-day up right here as well. You'll see that the price of these went from 20, 30 cents up to about $1. So, the takeaway from this is if you know that one of these is coming up, the potential value of the puts is skyrocketing. These went from 20 cents again to about $1.20, trading at $1.40, $1.20 on Friday. So that is a 6x increase in the value of this. So if you that math's right, up to 20 to 120 is a 6x increase. So if you bought $2,000 of SPIR puts because you knew this thing was coming, that investment was going to be worth $12,000 basically overnight. So huge, huge, huge returns. Now the question is, how do we know when something like this is coming? Now let's go back to the list here and see, okay, 424B3, this was filed on 9/30. Now what's interesting, oops, I didn't mean to do that. I need to sort by filing date again. But look what was filed on September 23rd. At the time when this happened, it definitely took me by surprise because admittedly, I didn't know a ton about these pipe unlocks, and Diamond Hands just put a very good source in the Twitch chat for those of you following along that has a good way to track some of these that are potentially upcoming. But from what we were looking at, right, we saw that stock that was up at 16. We thought there was no way this thing gets down to 7.5 by November. We saw November expiry, and the truth of the matter is it took less than 10 days for it to get below that price. But how did anyone know that this potentially was happening? Back to the filing list. You'll see right here filed on September 23rd, and September 23rd on the chart is right around here. This is, and it would have been filed after hours, so right around here. You don't see any big price reaction to this filing, which is interesting because if you go look into this filing, you're going to get pretty much the exact same information again. So remember, we looked at this, we saw it was almost 40% of it being unlocked, which that high of a percentage is going to lead to something like this. But the question again was, how did we know this was coming? Is it even possible to know this was coming? And the answer lies in what was filed on September 23rd. So there you have a Form S1, the general registration statement. This is basically letting you know from an equity perspective what's coming. So if you scroll down a little bit, this right here is going to be the moneymaker, right? You see that same number, it tells you there's 61.8 million shares outstanding. That matches up with what we saw right here. And if you read the second point down here, there are 24.5 million pipe shares. So we could have done this same calculation back on September 23rd when this was released. Now, I will say the one question mark with how this works is you don't know when this is going to be filed. It's not like, okay, the S1 has been filed on September 23rd. Every single time, it's 7 days later, the 424B3 is going to be filed. There's not a set time frame as far as the filing of those is concerned. So I think anywhere within 0 to 45 days is typically the window. So if we wanted to be safe, if we saw an S1 come through that had something like what we're seeing right here, where 40% of the total shares are pipe shares that are going to be unlocked, we could either wait a week or two and then buy puts, or off the bat, we could just buy some longer dated November 19th puts, right? Because even the November 19th expiry 7.5 strike puts, if you look at their chart, now we know the October's increased 6x, but these still had a pretty good performance as well, right? These bottomed out around 50 cents and got up to about $1.50, $1.60. So that would have given you the longer time frame, and you still would have gotten a 3x return on your investment if you had purchased those. But again, trying to match up the timing and the magnitude of the move is always tough when we aren't 100% sure on the timing, and the magnitude is kind of iffy, but we have a decent way to ballpark it with what we just looked at. So I don't always recommend buying puts, but I think it will be interesting if we stumble across another opportunity like this one where there's a potential for 3 or 4 or 5x returns. It wouldn't be the worst thing to take about a $1,000 flyer on something like that, and then if it doesn't pan out, it doesn't pan out. But there you have it right there. It was pretty much in plain sight, even though this seemed like something secret. This thing was filed on September 30th, and if you look at the price action on SPIR, that's when you see the drop off September 30th. But the actual moneymaker, the thing with the info up front, was filed on September 23rd, and no one really reacted, surprisingly enough, after hours on September 23rd. So it seems to me like the market isn't appropriately pricing in these events, or doesn't really have a true understanding for how this is happening. So I think this is a really, really big opportunity. Now let's take a look at the flip side of this, right? We saw that SPIR, 40-ish% of the shares were unlocking. And that is a huge, huge number, which leads to this drop off like we talked about. But let's talk about the flip side of this when there's not as big of a percentage. So we're going to go back to the SEC, Edgar. For whatever reason, there's not an easy way to click back and get there. And, JM saying, did I mention calls? Technically, no. They were puts. But, option buying might not be the worst idea in the world right there. But, again, SPIR was one where there was a huge percent being unlocked. Let's take a look at something like Rocket Lab. And this is going to lead back to the discussion we had earlier where we knew that this filing, this 424B3 was coming up, but we weren't too worried. So what we did is we saw the S1A, which came out on October 1st. So we knew that something was coming. And what's interesting here is, I just mentioned we don't know an exact time frame for when these things are going to be filed, but you see S1, and the timing from the S1 to the 424B3 was 2 weeks. So something to keep in mind. The one SPIR was 1 week. This is 2 weeks. So it seems like that 1 to 3 week range is kind of the money area if you're going to be trying to pick some strikes for puts. And you have my full permission to declare me burned as a witch for suggesting option buying. But not the worst thing in the world. So if we look at the 424B3 right here, we're going to pop this open. And we are going to see what we normally see, right? We see that there are 417 million shares of common stock. If we try to take a look at where the pipe shares are, let's see, 46.7 million pipe shares right here. That is a very, very big number. So let me pull up the system calculator. There you have it right there. So what we're going to see is the fact that even though, 46.7 seems like a very big number compared to what we just looked at, there's 417 million overall shares. So it's a much bigger overall chunk. And I don't remember the number, so let me move this slightly. 46,700, 1, 2, 3. Divide that by 417, 404,393. And that, again, that's that total number. It's the pipe unlocked divided by the total number. And that gives you 11.1%. And we remember that SPR that we just looked at was 39, 40%. This is 11%. That is a huge, huge, huge difference. So the high percentage ones are the ones that we're worried are going to fall off a cliff, whereas something around the 10% area, I'm not terribly worried about dilution. Now, as far as 10% is concerned, though, I definitely thought that on Friday we would see maybe a 10% drop, 6, 7, 8, 9, 10% drop on these. But we didn't see that big of a drop. After hours when the 424B3 was filed, we saw it go down to 1334. But again, it was only 11.1% of the shares that were being unlocked, and it went back up and it leveled off. So with SPIR, when we thought that the market didn't really identify the potential severity of a drop-off and the puts really shot up in price, what's happening right here with RKLB, if you took a look at the 12.5 strike puts as we head into the week, or if we could look at the January ones that we personally were holding, these were almost pricing in too big of a move, as opposed to the SPIR ones pricing in a move that wasn't big enough. So if we pull that chart up again, we'll see there's the event, and here's that big red candle, meaning a decrease in the value of the puts that we sold, meaning profit for us. And I don't know why this page feels the need to reload, and I have to scroll back down here. But what I was going to point out was the fact that we made $2,000 this week off of that drop. And the reason we were comfortable with holding on to Rocket Lab through that event, through that 424B3 and making this $2,000 was because we went into the filings. We took a look at it. We saw that it was only going to be an 11.1% lockup as opposed to what we saw with SPR, which was 40%. So in our mind, the options were overvaluing the potential move because the potential move wasn't going to be that big. And we could see it in the huge decrease that we saw right there. And we could even take a look at the October ones. I bet these had a decent bit of value shaved off them as well. There you have it, another big red candle. And this is an even more considerable decrease than what we previously saw, as this one went from about $1 down to 38 cents. So you got about 60% of max profit on what would have been about a 6-7 day trade just overnight from reading through the filings, understanding that this wasn't going to be as big of an event as the premium perceived it to be. And again, we could have backed up and looked at the S1, scrolled down a little bit, and seen, excuse me, this is the amendment. If we go to the S1, dead air as we wait for this to load. All right, it's taking a little bit too long to load, but the idea is the fact that, you know, this is going to be presented in that S1 that was previously filed, like what we saw with SPIR. The fact that, you know, even though this came out and we didn't know the exact date it was going to be released, the percent lockup, or excuse me, percent unlock really wasn't that big of a secret at all. So that is how we took advantage of that opportunity and pulled a solid little $2,000 of profit off of that. But it's the same reason that we got in and out of FFIE. So FFIE, if you go to SEC, the company search again, you type in FFIE, there you go. You're going to see that they've filed that S1, the S1A, for that registration of securities. And hopefully it loads this time. But again, the idea is that there is going to be a share unlock. Here we go. It loaded. So the easiest way to potentially do this is to look right here. Command F, type in pipe. And there you have it. You're going to see that there are 76.1 million pipe shares. If we scroll back up here, you're going to see that's out of a total of 236 million. So 76 million, 123, divided by this total right here, 236, 226, 156, means that the unlock on FFIE is going to be 32.17%. So again, that's a pretty significant number. That's up in the neighborhood of what we saw with SPIR. And another example with what we previously saw with VLTA, excuse me, I need to type that properly, VLTA, you'll see that there was another big drop off on VLT going from 12 to about 8, almost pretty much identical to what happened with SPIR. If we go to VLTA, just for sake of comparison, we could find that 424B3, and we could see that they had, if we control F, look for pipe, 30 million shares out of a total of 89 million. So again, that's pretty much that 30% number on the dot. And that 30% number brought VLTA from 12 down to a base of about 8, and it settled around 8. That same 40% number brought SPIR from 12 down to under 8, down to 6 or 7. So a 30% one on FFIE presumably would get it back down near 8. However, it's already taken that initial drop. So here's a little bit of uncharted territory for us, right? We have that example of VLTA. We have that example of SPIR. And I guess I shouldn't say Command F. I should say Control F on my keyboard, if that's the criticism I'm getting from you right there, Sleepy. But to that point, we looked at SPIR. We saw that go from 12-ish down to 8-ish. We looked at VLTA. We saw that go down from 12-ish to 8-ish. This is one where there's similar unlock percentages as far as how many shares are being unlocked, but the stock's already at that level. So I don't really have a great example to leverage to know what happens when it's already down to where we expected it would fall after the share lockup. So I think FFIE is going to be an interesting one to keep an eye on, just to see when that 424B3 gets released, to see what happens. And if we find ourselves in a situation where, hey, again, we have a pretty beefy pipe unlock coming up, and it turns out that nothing happened because it was already down at these levels, then we could have some confidence in the future loading up on something like a 7-strike put, because these things are, pretty far out of the money, right? We could look at the ROR here. That's a 2.56% ROR. We could even do the 7.5, a 4.7% ROR for something that's decently out of the money on a week-to-week basis. So if something like this does happen, the unlock happens, and then nothing happens to the share price, that'll be another area of opportunity that we could identify for some point in the future. But that's the whole spiel on pipe unlocks. I think it's great to have some sort of running list that we could come up with where we track the S1, the S1As that have been up, just to have an idea of upcoming potential ones and the amount unlocked on certain stocks. And as far as buying a put on FFIE, to answer the question from Neverender in the Twitch chat, I don't think buying a put is going to be the way to go. I think if the stock were trading around 11 or 12, as we saw with VLTA or SPIR, that's when there would be value in buying a put. For the fact that, one, we don't know if it's going to be this week. We don't know if it's going to be the week after this, the week after this. Hell, we could buy November. And if we bought a 7.5 strike put, we would need it to go below 625, meaning we would need the stock to go all the way down here for us to make money on that November put. And that's just, one of those situations with option buying where I feel it's just a little bit too big of a move to potentially bank on. So I think the idea for how we're going to handle these pipe unlocks in the future is, one, potentially take a look at a call credit spread, something like that, where it's a bearish to neutral play, whereas, if it goes down, you're going to make money, but you don't get crushed if it stays relatively flat. Or we're going to hang tight and wait for some stocks that are a little bit more, I guess, higher priced, so that there's a little bit more room to fall with those upcoming potential lockup expiries. So that is that's something we uncovered this week. I wish we had uncovered it, a couple weeks ago before we fell victim to TMC, to LIDR, to SPIR, but an expensive lesson, but one that I think we learned very quickly. We hopefully got the word out on that one very quickly, and one that we hope we could use that knowledge to find some more of these opportunities and put ourselves on the other side of that initial trade, or potentially after these big initial drop-offs, like with SPIR, get ourselves in on the ground floor where there are options post-drop where they're still offering some really nice ROR on a weekly basis. I think VLTA is another one where it's after it's dropped off, there's still some really nice premiums on a day-to-day, week-to-week basis, even month-to-month here, that you could potentially get in on. So that is going to be how we take that approach. And back to the profit tracker. We're coming up on about an hour, so we're going to have to cut the stream off at some point here soon. Let's talk a little bit about what we have for the upcoming week. And because I have not rolled this forward yet and can't quickly talk to it, I'm going to take us to our Discord server and just go through the HT Trades channel and talk about the trades that I made for the upcoming week. So if you have not done so already and are watching this stream, I think signing up for HT Premium is a great value. $25 a month or $225 a year, which is a discount on a yearly basis. You can get a free month by signing up with our Webull link that you can see right here in the Discord server. Or every single monthly subscription that is purchased comes with a week free, so you could try it with no financial commitment to see if it's something for you. You're going to get all of our trade alerts. We write some trade plans out, like everything we talked about with the pipe investment was available right there. We have a watch list. We have option scanners that we use to come up with trade ideas, and we have a premium chat channel right here with more for telling me that my stream lagged out, but I'm back again. Thank you for the update. But, to talk about what we have for the upcoming week, let's take a look at what we did. So October 8th is typically, was last Friday. Yeah, it was last Friday, and that's when we open our trades for the upcoming week, and I think that was when we started them. So that's a couple closing trades. And top of the list right here, Rocket Lab, 1015, 12.5 strike puts. We called those out when they were trading for 50 cents. They're down to 35 cents, meaning that position already made about $150 so far, so that one's been pretty solid. And again, that would pay for almost a year of HT Premium, just saying. However, even at 35 cents a piece, I think these are still a good value. Looking at that chart, like what we talked about earlier when we had the discussion, as long as it stays above 1250, this red line right here for the next 5 trading days, you're going to hit max profit on those, which even though they're down to 35, they're up to 40 cents. But if you sell 10 of those, that's $400 of profit for you. And That is 2 years of HT premium. Just saying, we might start using that as a unit of measurement around here. But so as to not be annoying and continue to plug what we're selling here, we are going to keep it moving. Crsp, we closed that initial position out, but we rolled it forward with 95 strike puts for the upcoming week. This one's interesting because I say not to play biotech, but I play this one with the justification that, if you sell puts on something, golden rule is to sell puts on a stock that you'd be happy to own. And this is a stock that I'm, super bullish on long term. I think the technology that they're working on, it's gene therapy, super, super interesting. We'll have some really nice applications at some point in the future. As far as the price action on the stock, it topped out at 220, so there's definitely potentially some legs on it. And there should be support roughly in this 95 area after it broke through the previous support of 104 that we pointed out. But with that in mind, selling the 95 strike puts for the upcoming week gives some really, really nice premium, 3.26% ROR on those, which is a fantastic number on a week-over-week basis. What's the catch? Why is that number so big? The answer partially is because of the downtrend, but also because they have a conference coming out this upcoming week where they're going to be presenting some data. However, I think over the weekend they made an announcement that they were able to cure some sort of eye disease or something like that with the gene therapy technology. So, with the future outlook of this company, it's one that I think there's always going to be some decent juice or excitement on the stock, and one that I would be perfectly happy with holding long term. So that's why I sell puts a little bit closer to the money and on something that's a biotech stock. So join that one, don't join that one. That's my justification. It's not a super mechanical HT wheel type approach. It's one where I just sell puts because the premiums are good, as an added bonus to the fact that it's a stock that I would be comfortable holding long term. And then we took profit on Hyliion, but I think we re-entered. There you go. We re-entered at the very end of the day for 18 cents a piece. Again, one of these situations where we were able to roll the stock down and out. The strike down and out. We rolled it down to 7.5. We rolled it out to the next week. We took an initial 135 profit on our first one, and then we set ourselves up to make even more profit at a lower profit target, right? So if it stays above 750 this week, we're going to be pulling whatever 18 times 50 is. And we'll do it really quickly. 18 times 15. There you go. $270 if Hyliion stays above 750 this week. There's some really long established support in the $8 range that it unfortunately broke through. However, I'm really hoping this thing levels out. It really has started to steady relatively compared to what it has been doing in the past year. But looking at the 10-day chart, it bounced before it even got to 750. It got to 780 after hours. So I'm pretty hopeful for the outlook on those 7.5 strike puts in the upcoming week. And again, one of those where our break even is going to be all the way down at 720, 738. What do we sell them for? 732. We sold them for 18 cents a piece. So that's our break even price. That's a price the stock hasn't traded at since ever. The lowest it has ever gone is 754. So I'm happy with having that 732 cushion for the upcoming week. Next thing we did was we made an adjustment on a TMC position. We sold 3.5 strike puts for the upcoming week. That one is one that admittedly is risky because it's a little bit smaller of a position. The stock has fallen off the face of the earth, but because of that, the premiums don't look too bad. For the upcoming week, those 3.5s are offering 25 to 30 cents a piece. Looks like we sold those for 26 cents a piece, right? So we're going to have a 324 break-even price on a week-to-week basis on those. If we zoom this into the 5-day chart, that is going to come down here. 325 break even. So that's something I'm happy to be at. I think if we pop the RSI study on this chart, this is one where RSI is just in the absolute basement right now. So we're expecting some sort of short-term rebound. If we back this up to the 180 day, firmly in the blue here. And the last time we got this far into the blue was back in end of September 30th, when we saw a little bit of short-term relief. So we're hoping to see a little bit of that short-term relief. When combined with that break-even price that we have, I think is a really solid setup for a trade for the upcoming week. After that, we did CCXI. We sold 20 strike puts for 20 cents a piece. And that one's interesting, right? Because as long as it stays above 20, we are going to hit max profit. And where's the stock? The stock's at 38. So this is an example of an IV reversion type trade. Now we have RSI on here. Let's bring our buddy Implied Volatility back on. all studies. If we go to right here, implied volatility, there you go. I mean, it dropped off the cliff relatively. Now, if we cut the chart here, we are going to see that implied volatility is still sky high on a day-to-day basis. Now, the reason behind this and why it was so high before it fell back down here is because they had some sort of trial data that was almost make or break for the company. And with that in mind, if we go back to the 20-day chart to kind of walk through the idea behind this trade. So knowing what we know, we sold a 20 strike put. So as long as it stays above this red line, we are going to hit max profit, which is about $200 for the upcoming week. And not to mention, we have just an enormous cushion on that. So with this stock, it was trading right around 20 before it popped off anyways. And this was a make or break trial. The trial was huge, right? And if you take a look at some of the news, they got upgraded to a buy. The price target was raised to $107 a share by Raymond James. So obviously, after this data has been presented, the company should be worth more now than it was before. And if what it was worth before was about 20 a share, then there is no good reason over the next 5 days that this thing should come anywhere near $20 a share. And if it does fall back down, I expect it to at least level off around 20 because that is where it was before it absolutely took off. And that's the idea behind that. But because implied volatility is still so high, and it's not going to be as high as it was pre-make or break news, but still relatively high, these are going to have a little bit of premium, which we hope melts off over the upcoming week for about a 1% return on risk in a week, which is a really, really good number and a really high percentage trade. I think we're targeting an exit at 5 cents for a debit between Monday and Wednesday if possible. And then the next one that we got into before the end of the week was Roblox, 66 strike puts for 51 cents a piece. Let's just take a look at how that one sets up. Roblox has been super, super volatile since it came into play when it IPO'd a little bit earlier this year. And it IPO'd right around this level. There's some decent support with that red line at 65. And again, looking at this 180-day chart, identifying areas of support and resistance was a huge reason why we did what we did. Because we see one bounce off of here back in March. We see a huge bounce off of it back in May. And it really hasn't tested it since then. And it's in a decent downtrend. This is one where I think RSI is another decent justification for entering into a bullish trade. There you go. RSI is down at 32 on the 180-day, which is getting, this thing turns blue and it gets below 30. Last time it turned blue, we saw a spike from here to here. Last time it turned blue before that was September 21st, where we saw some short-term relief. And I'm, maybe not expecting, but hoping that with the similar RSI reading coming up, it may go a little bit lower, but every time it's gotten down in this blue area, there's been some sort of short-term relief. And for selling a put that expires this Friday, short-term relief should be plenty to let these things cruise to a profit. And those are going to be just under a 1% ROR, so return on risk on a weekly basis. Question from Judah in the YouTube chat. This is Thinkorswim. This is TD Ameritrade's desktop trading platform. Perfectly free to have an account and download Thinkorswim. I think there are people obviously who don't even have money in TD Ameritrade, but just download Thinkorswim because some of the charts and stuff on it and some of the tools it has are very, very useful, and people just use it for that purpose but trade on different platforms. So if you're interested in using something like this and pulling up studies like that for just research purposes, that is an avenue you can pursue to pull that up. But that is the end of the list. And again, if you are not, I would always recommend signing up for HT Premium. This is what you get. You get trade announcements where you're tagged in these. You're going to get alerts to your phone. These basically come across no different than a text message. And you're going to get every single entry, every single exit we have on every single trade we make, which so far this year has resulted in some really, really nice profits that you could see as we scroll through our profit tracker so far year to date. But that is going to be all we've got for this upcoming week. Again, I think it's always so important to have a decent amount of buying power on hand. And I need to update all these because these positions are closed. This buying power is no longer being used. And we are using much less than 50% of our buying power as we head into the upcoming week. So that is something to always keep in mind. High overview, year-to-date summary. Things have been going very, very well. We're back at an 89.66% return. With that green first month in October, we slightly outperformed, which is always a win. And we love the fact that we are hopefully keeping up our streak of making money in every single month of the year so far, because that is, if we never lose, we are going to win. But I think personal goal is getting this up to a 3-figure return by the end of the year. The market has unquestionably been a little bit shaky lately, and we have done a great job kind of keeping our head above water. I think we've outperformed, even though it was slightly last week, slightly the week before that, we've kept up this streak of outperforming the S&P 500 on a week-to-week basis. The last time we underperformed on a week-to-week basis, I think it was actually back. There you have it. We haven't underperformed the market on a week-to-week basis since the middle of July. So I think that's an awesome metric that we could look back to and be proud of for what we've done and what we've set up. And again, credit to people in the group as well, because some of these ideas are not entirely my own, like Roblox. We had someone in our chat call that one out, our premium chat. There's all sorts of ideas being thrown around. I think we had some DD being posted earlier today by Diamond Handsies, which was really good on Rocket Lab. But that's another benefit of joining the premium service. It's less than $1 a day. And another question right here. Can we check the SPAC unlock percentage for IonQ? Yeah, we could definitely do that before we cut the stream off. I think that would be a good exercise. But closing out the loop here, this is what you get with HD Premium, less than $1 a day. And I think if you take a look at the Winning Trades channel, members that we have posting in here, the amount of money that we're making, I think it is definitely worth it for the value that it should add to your trading experience. Even though sometimes it seems like Jules does dominate the channel a little bit with her profits and emojis. I'm always happy when people are making money. But yeah, final exercise of the night. Question from the chat. Can we check the SPAC unlock percentage on IONQ? And that used to be DMYI, I believe. Let's take a look. There you go. Formerly DMYI. We see that the S1's been filed on October 4th. Let's take a look at the S1. We're going to Control F for Sleepy Condor so he doesn't get mad at me for, misidentifying keys on the keyboard. But type in pipe. What do we see? We see 34.5 million shares. And if we scroll back up here to the equity structure, which should be at the top, we see that there are about 100, there we go, about 105, 115 million. I don't know if you want to count the warrants or not, but between the primary and secondary, there's 116.5 million, and there are, what did we say, 34.5. Let's pull the calculator up to get an exact number. So 34,500, 1, 2, 3, divided by, we said 116 million. And that's going to give you a 29% unlock. And again, that's right in the wheelhouse of what we saw with SPIR, LIDR, VLTA. So let's take a look at IONQ, see what's going on with that. 841, and unfortunately, it looks like we have missed the drop-off. So I think maybe the market's wising up a little bit to stuff like this, but over the past week, I think there are definitely some opportunities where the potential unlock as far as magnitude is concerned is not going to be anywhere near as large as what's priced into the options. So definitely some opportunity, whether we think that there's going to be a bigger drop than what the options price in or whether there's going to be a smaller drop than what the options price in. I think it's definitely a good idea to just keep our eyes on those former SPACs, read through the S1s, the registration statements, get that unlock percentage number in mind, and then move forward and try to make some money off that. But with that said, I think that's pretty much all we've got for this week. It's been about an hour and a half on the stream. So once again, for those of you who have been tuning in week after week after week, cannot thank you enough. Appreciate everyone who's been super active in the chat, throwing comments in, questions, some stock suggestions. There's stuff that I've been forced to learn that has been super helpful to me, and repeating those lessons to you hopefully has helped you guys learn and improve your investing experience even more, especially with stuff like these pipe unlocks. And hopefully we can identify something this week that'll put us on the other side of that and we can start making money off what we've learned. Not just stop losing money from a lesson, but to put ourselves on the other side of a trade and start making money from that lesson. But again, excited about what we've got held for the upcoming week. I'm going to roll this forward here soon so you can actually see a more concise lineup of what we're holding for the upcoming week. But again, if you want those alerts to what we're trading, when we're opening, when we're closing, that's all going to be under HT Trades in our premium chat channels. Those all come with HT Premium. You can sign up at our website, www.hourglass-trader.com. So there you have it. And again, Sleepy, thanks for another voice shout out. We'll have to get you on the mic here sometime. We'll have to start calling in some members, some live Q&As, some one-on-ones here, some group convos live on the stream. See what type of technologies we can implement on the stream here soon. Cliffo, appreciate you checking in and tuning in with us. I'm glad to see everything's been going well for you lately as well. But with that said, I'm going to end it the same old corny way that I always do because I feel like that gives us good luck. I think the 1 week I didn't say it was this week right here where we lost $3,500. So for those of you who are still hanging on till the end with us, thank you for watching. This has been the Hourglass Trader, where as time passes, we make money. And hopefully I'll talk to you all again a week from now where you have more money in your account than you do today. Thank you guys.